Since the new CPI data this week, lots of assets, including gold, have dropped. What is the outlook for gold up to and after the upcoming FOMC meeting? Welcome to myfinanceteacher.org, where we regularly discuss a range of assets, including commodities, cryptos, stock markets, and energy. Last time we looked at gold, I was expecting gold to rally into the second daily cycle of a new intermediate cycle. I was wrong there, and the daily cycle continues currently at 57 days long. As I mentioned many times before, gold's daily cycles last for 1.5 to 2 months on average, of course sometimes stretching, sometimes shorter than that. The daily cycle is close to a low, and gold will likely bounce into the next daily cycle within a couple of weeks. A more important question is for the intermediate cycle. One scenario is where we've seen a new intermediate cycle that is already declining, as indicated by this recent lower low. That implies trending down for quite a while with occasional bounces into new short-term daily cycles. I give this scenario only 35% chance. A more likely scenario is where the intermediate cycle of 2022 didn't finish in July, and we will see the upcoming intermediate cycle low in another 2 or 3 weeks. This would imply a stronger recovery into a new intermediate cycle, with the recovery lasting for perhaps a couple of months after the upcoming low actually takes place. I would give this scenario a 65% chance as opposed to that 35% chance of a new intermediate cycle since July, which has already broken down. And now why the second, more optimistic scenario is more likely? Well, first, the intermediate cycles last for an average of 6 months. Short cycles are sometimes followed by longer cycles and vice versa, which kind of maintains this average duration of around half a year. The early 2020 cycle was relatively short at 4.5 months long, followed by a very long cycle of 8.5 months long, followed by a couple of relatively short cycles in 2021. So it's likely that this 2022 cycle is still stretching after those shorter cycles in 2021. Secondly, as smart money sometimes deals in miners rather than gold itself, let's have a look at GDX on your left. And GDX hasn't actually followed gold down to a lower low. That is somewhat of a positive sign so far. And similarly, looking at silver that's on your right, silver too hasn't followed gold down into a lower low. Again, another minor positive sign. Thirdly, looking at the expectations for the upcoming FOMC meeting. Last week, the market was expecting a 75 basis point hike with another 13% of a chance left for a lower hike of only 50 basis points. After the CPI data this week, the market expects a tougher stance from the Fed, still with a likely 75 basis point hike, but with another 24% chance of a higher hike of 1%. That's 100 basis points. So if the Fed actually raises by the expected 75 basis points next week, gold perhaps might start a bit of a recovery, as a higher hike of 100 basis points would be off the table. Fourth, looking at the market sentiment or the optimism index, it's already at very low levels. It's currently at 26. Usually intermediate cycle lows come with the optimism index somewhere below 30. So it's unlikely that we have seen a new intermediate cycle since July that has already started declining, because then the sentiment would have to trend even lower and lower for another few months. Which is not impossible. The optics can break down far below 20, but it's not likely. And looking back at the end of the gold's bear market, for example, in 2015, this new cycle rally in early 2015 into a new intermediate cycle did manage to bring optics slightly above 50, even in a bear market. While looking at the most recent rally since July, we haven't actually seen optics above 50 yet, which again suggests that perhaps the 2022 intermediate cycle is still stretching. Fifth, Looking at the commitment of traders reports, while the gold COT report is not very impressively positive, the smart money commercials, the red line, they do have the smallest net short position over the last 3 years. So that's a bit of a small positive sign, but more interestingly, looking at silver, we see the smart money commercials are holding a net long position. And that doesn't actually happen often. The last time it took place was in mid-2019 at the intermediate cycle low, which was followed by a 35% rally in silver. Nothing outstanding, but a 35% higher from here would be nicely around $24 on silver. And lastly, looking at seasonality since 2015, seasonality actually agrees more with the less optimistic scenario. So it looks like we're having a bit of a balanced view over here, where seasonality suggests that a drop with occasional bounces is likely until December. That's actually when gold often bottoms out. This actually aligns well with an intermediate cycle declining with occasional bounces into new short-term daily cycles. So which of these two scenarios do you prefer? Where do you see gold price, say, by Christmas? Let me know down in the comments below. While you're there, remember to hit the like button, subscribe to the channel, and of course, have a nice weekend.